Hello, good afternoon, everybody. Thank you for joining us today. We're delighted to be joined by Andrea Fejos from the University of Essex, who we have been working with as Andrea has been putting together the Affordability Assessment for British credit unions. I know that Andrea has worked with a number of credit unions throughout this process as well, so if you're one of those, thank you very much for all your support and help with this, and it's exciting that you get to see this here today. Andrea can introduce herself properly in a few minutes' time. I'm just going to go through a little bit of housekeeping before we start this session, if there's anybody who's not familiar with the GoToWebinar system. So we'd love it if you can interact with this session as much as possible. It would be really great to hear your thoughts on this. If you look on the panel to your right-hand side, there's a couple of options on there which we'd like you to use if possible. So first and foremost, and perhaps most importantly, you've got a handout section there, and you'll see a brand shiny new copy of the Affordability Assessment right there for you to take a copy of, have a look over yourself. Feel free, it's a large document. Andrea's been working on this for a number of years. Have a look at it, read it in depth if you like. If you've got any questions which come from that following the meeting, please feel free to reach out and I can connect you with Andrea, no problem at all. But you can take a copy of that right now. Would also appreciate any questions throughout the session that you may have. So Andrea is going to do a presentation. There will be a couple of polls throughout that as well, just to get your thoughts on it. If you've got any questions or thoughts or ideas throughout this, please just put them in the question tab. We will have a section for questions at the end. If for any reason we have too many questions and we run out of time, we are going to be sending these questions across to Andrea, and we will make sure that you get an answer via email or call or whatever's most convenient. So please don't worry about that. So pop in anything you like throughout. So that's enough for me for now, and I'm delighted to hand you across to Andrea.
Thank you, Jake. Good afternoon, everyone. As Jake says, my name is Andrea, and I'm a senior lecturer at the University of Essex. My background is in law, and I work at Essex Law School. I teach contract law and banking law, and this is also my area of research, which is in the area of retail financial services, in particular consumer credit. And it is my pleasure, therefore, that I was able to work on this guide. And as Jake says, this is the start of the journey and not the end of it. So I hope that this is going to be really useful and well used. But I'm going to be in touch in the future to see how you are getting on with the guide and whether any changes are needed. Let me just this webinar is to introduce the guide. It is aimed for a more general audience, and I'm aware that most of the audience is the credit union sector. I just want to add that there will be a more tailored discussion designed for the credit union sector, and also I'm going to consider all the questions that I'm going to receive today in designing those sessions. And this is therefore a general introductory session where I'm going to introduce the guide, what are its aims, scope, etc. Then after that, we are going to go through the main principles and standards in the guide. Then we will have time for questions and answers, and there also are going to be 2 polls that will come up towards the end of the session. I would like to thank the University of Essex for their financial support throughout the project, but including making possible this really nice presentation that we are having today that is very nicely designed. Also, I'm very thankful to ABCUL for raising the problem and for supporting me throughout the process of working on this guide. In particular to Jake, who was really, really helpful since he's in this position. I'm also thankful to the credit union sector, to everyone who contributed to the making of this guide. It has been more than 2 years, so there were different instances that I was in touch with various credit unions, and without them, we would not have this guide in place. The Financial Ombudsman Service was also really helpful in providing comments, and the Financial Conduct Authority was also involved in the process. So what are the aims and scope of the guide? The guide aims to support the credit union sector by setting out principles and standards of good lending practices in providing small value short-term loans. So the guide is primarily aimed at small value short-term loans, and I'm going to explain in a moment in the next slide why there is a need to address these specifically. So as you know, there is a legal gap. The existing legal and regulatory framework does not apply to credit unions when they provide certain loans. These are called unregulated loans, and specifically small value short-term loans that are currently around £500 fall under this regulatory and legal gap. So initially, when I started working on the guide, I thought that it's going to apply more generally to all unregulated loans. But then at some point, it became clear that the most guidance is needed in these small value short-term loans. So therefore, the guide is primarily aimed for these. Whether it can be applied for other loans, probably, but it's not. It wasn't the primary aim to extend to all unregulated credit. The guide also aims to raise awareness of the specialty of credit unions as lenders, the specific category of borrowers that borrow small value short-term loans, and the challenges that credit unions face in providing these. So therefore, the guide is limited to small value short-term loans and to unregulated credit. Obviously, for regulated credit, credit unions need to follow the existing legal and regulatory framework. So why small value short-term loans? Well, the borrowers who borrow these loans are in a situation of low financial resilience to withstand financial shocks for various reasons. It can be because they are unemployed, because they live on low income, because they are in precarious employment, maybe they have multiple outstanding debt or toxic spending habits. So the reasons may be various, but these borrowers are usually financially excluded, or they would be financially excluded if they would not have access to credit union loans. This means that they don't have access to bank loans. The only loans that they can access are high-cost credit and credit from loan sharks, which is obviously not good for them. It exacerbates their already precarious financial position. So credit unions are really crucial in financially including this category of borrowers, which is increasing now in the cost of living crisis. And credit unions are really well placed to provide loans to these borrowers. There is a case study in the guide of a credit union who successfully financially included a number of members who were receiving child benefit. But credit unions in providing these loans face a number of challenges in affordability assessment. Some of these members don't have a transactional bank account. And even if they have a bank account, they are not with a credit union. Therefore, credit unions need to resort to open banking data, which is dependent on the member, what they give consent to be shared within the open banking system. And this report also has to be interpreted. Credit unions can also refer to credit reports by credit reference agencies, but these reports often don't contain the relevant data for credit unions that could help them in assessing affordability. For example, the payment of rent, payment of mobile phone contracts, payment of high-cost credit, payment of council tax. There's also limited data in public records, such as on personal bankruptcies, and some relevant data is absent, for example, borrowing from friends and family. So these are all the challenges that the guide takes into account in providing the principles and standards. So how was the guide created? We have already mentioned that it was a long process. It took more than 2 years. It is a collection of good practices that was created by formulating and adjusting, amending primarily the FCA handbook conc rules, adjusting them to the specialty and the special challenges that credit unions face and the category of borrowers that they are dealing with. I've also considered the FOS decisions as of a certain date, the FOS on Affordable Lending Guide, some other documents, especially the FCA CP 1727 document, which was very useful. The project started by interviewing credit unions for me to understand what are the special features that need to be considered. And after that, I created the first version of the guide. This version was then commented and looked at and read by various stakeholders, including the credit union sector and the FOS. And I was adjusting the guide to these comments. There has been many versions along the way, and I think this would be version 13 that is currently being published. So the guide contains non-binding principles, standards and explanatory notes. As you have the guide in front of you, you can see that there is quite a substantial volume to it. This is primarily because there is the introductory part that introduces credit unions and the challenges they face, the aims and etc. of the guide. So the sort of things that we are talking about just now. And then there are the principles and standards and the explanatory notes. The explanatory notes can come up to quite a substantial volume as well, but I thought that these are really useful because they provide the thinking process, the reasons behind the formulation of the principles and standards. So even myself, when I read various rules, I always look for these explanatory notes because they help us understand what is the background and why the principles and rules and standards are as they are. They are called principles and standards especially, so to differentiate the guide from binding and mandatory rules. Initially, I called them rules, but then we changed them to standards. The guide does not contain case studies and checklists, simply because responsible lending and affordability assessment is not an exact science. I had included at some point case studies, but there were a lot of comments on them not being comprehensive, not being suitable. And so then I realized that we could either have a collection of case studies and go down that route, which should not be future-proof and it could not be complete. Or we can have a more principle-based approach which is future-proof and which can then be adjusted, applied in the case at hand. So this is then the option that we went for in consultation with all the stakeholders who were involved. And therefore, I know that there would be a need for case studies, but unfortunately, we were unable to include case studies into the guide. For the same reason, there's no checklist. It could have been very general, but that would not help anyway. The guide is voluntary. Therefore, it is up to the credit union to decide whether they will follow the guide or not. But it does set out best practices that credit unions can adopt in forming their lending criteria and risk-based approach. So therefore, obviously, it's recommended to use the guide and to adjust the guide to the practices of the credit unions. I have to say that because it's non-binding, it does not represent legal or regulatory advice. There's also no trust mark. The idea came up at some point. But the decision was made not to have a trust mark because it would have been very complicated to monitor compliance with the guide and who is going to also award the trust mark and monitor its use. The question that may arise now is whether partial compliance is possible. To my mind, the guide is an organic whole unit. As a human body that has various organs and they all have their own function, I look at the guide in that way, and this was my approach when I was drafting it. It is quite possible that partial compliance is possible, so practice will show. If a credit union adjusts their lending policies to some extent to the guide because they already follow most of it, that will still be full compliance. So I don't expect that credit unions are going to radically revise of what they are doing. It is more about looking at their own practices and considering whether this would be compliant with the guide or not, and maybe making some adjustments. The guide, in terms of its structure, has a background over a couple of pages, which explains these things that we just talked about. Then in part 1, it lays out general principles. And in part 2, it talks about specific standards of lending standards and good practices. So I'm going to dive into these now. I will stay quite general because we don't have much time, but I'm going to go through the main aspects of each principles and standards. And I'm primarily going to focus on those aspects when there is a departure from conc rules. So there are 3 general overarching principles. One is that credit unions must only provide affordable loans to their members, that lending decisions must be based on affordability assessment, and that affordability assessment must result in a good outcome for members. So these are the 3 overarching principles, following the FCA handbook's approach of having the high-level principles, the principles for business, that overarches and that should be observed in everything credit unions are doing. So the idea was the same, to have these high-level principles, and then these are then concretized in more specific standards. So these principles were here from the very beginning of the first draft, and many people looked at the draft in various capacity, and no one said anything about these principles. So I'm assuming that there is a general consensus that these are good overarching general principles of good lending practices. Now, Standard 1 and Standard 2 talks about when affordability assessment must be performed. It has to be performed before every new contract and also before increasing the loan amounts provided. Now here you see a departure from conc rules, because the conc rules say that there has to be that affordability should be assessed for every single new loan and for any substantial or significant increase of existing lending. Now, there is a departure from the conc rules here, and the guide provides that affordability should be assessed for every single loan. And the reasons are that this reflects good practices in the credit union sector. Credit unions don't offer loans on no questions asked basis, so something they will do for sure. Now, obviously, affordability is assessed following the principles of proportionality. It's not going to be the same for every single small value short-term loan, or top-up, as it is called in the sector. But something has to be done for every single loan. The conc exception was not intended for small loans. These rules are coming from the European Directive on Consumer Credit, which did not apply for loans under 250 euros. So therefore, the initial drafters of this exception did not have very small loans in their mind when they inserted this exception. This would create also confusion and potentially going around the guide in a way, because if the new loan, the top-up, is construed as a new contract, it is subject of an affordability assessment, and if it is construed as an extension of existing loan or amendment of the existing contract, it is going to be potentially, if it's not a significant increase, it can not require affordability assessment. So I don't think it's fair to allow for this legal construction to make a decision whether affordability assessment is needed or not. It might also not lead to good outcomes for members, because we have to remember that the guide is primarily aimed for members who are already in precarious financial position and they borrow small loans. So how can we assess what is a significant increase for a very small loan? That would be very difficult to put in the guide. The exception is also contrary to the FOS's position, and it would undermine the guide's purpose of providing good lending practices in the credit union sector. So therefore, the decision was that affordability should be assessed for every loan, but we will now go through and see how it can be done. So Standard 3 provides, in line with Principle 3, that affordability assessment must result in a good outcome for a member. This means that it follows a prudent lending decision. A prudent lending decision is a well-informed decision that follows a reasonable and proportionate affordability assessment. So a good outcome is an affordable loan. And as you can see, the emphasis here throughout, and as you can also see in the title, is on affordability and not on creditworthiness assessment. And this is because affordability is always first for the credit union sector, because the credit unions have the interest of their members at the forefront, and therefore the guide also adopted this approach and talks about affordability rather than creditworthiness assessment. So this leads me to affordability risk, that affordability assessment follows affordability risk. Credit unions must determine the affordability risk of the loan. If the results of the checks are low affordability risk, then the loan is affordable. If it is high affordability risk, then the loan is not affordable. Unfortunately, then the application has to be rejected. And although members apply for the loan because they need money, they are also in a precarious financial position, and therefore credit unions should be really careful in making sure that they are confident that the loan is affordable and that it is not going to exacerbate the financial position of the precarious financial position of the member. Now, if the initial checks result in inconclusive results, so the credit union is not confident that the loan is affordable, then they can continue with affordability assessment, looking at various other sources of information, other type of information, extending the scope of their review, or they can reject the loan application. So that will depend on them. There is already a good practice in the sector that credit unions would have policies and processes on supporting members whose loan application was refused. So the guide just collected that as a good practice. Now, in the heart of affordability assessment is Standard 4, that it must be reasonable and proportionate. So this goes back to the characteristic of affordability assessment, that this is not an exact science. Therefore, it's very difficult to give exact metrics. And this goes back also to what I said about needing to assess affordability for every single loan or top-up. But the question is how it is done, because it should be reasonable and proportionate to the circumstances of the case. And this means that affordability is assessed based on sufficient information that relates to the loan and the borrower, and credit unions should take a holistic approach to look at the circumstances of the case. Now, the FOS says in its guide that reasonable and proportionate checks would usually need to be more thorough the lower a customer's income is. So the guide makes an exception from this approach because simply it would be not possible to have a too thorough assessment of affordability for every single top-up, no matter how small it is. So affordability can be assessed, but the approach again has to be it should be assessed, but the approach should be proportionate and reasonable. And the question is then, when is the approach proportionate and reasonable? And looking at the already existing decisions of ombudsman, especially in credit union cases, they say that it is reasonable and proportionate if it goes far enough. So therefore, the guide adopted this approach. Far enough, however, is a question of fact. It might lead to a full understanding of the member's financial position, or it might not, and does not necessarily require reliance on all available sources of information. So again, it is about looking at the circumstances of the case, having a holistic approach, and then deciding what to do, what information to consider to be confident that the loan is affordable. The guide differentiates various types of information, such as information related to the loan, previous borrowing, income, savings, discretionary and non-discretionary expenses, and behavior and spending habits. Savings balance can be considered. Credit unions are really special compared to other lenders because members have to save with the credit union. And the question is whether this balance on the savings account can be considered. And it is good practice that it can be considered provided the member agrees to use the savings for repayment. So these are the various types of information, and then the guide specifies that there are various sources of information where credit unions find this, and this is the information that is coming from the member, internal records, open banking, credit reference agencies, etc. But in all affordability assessment, it's really crucial that it is evidenced. Evidence can be subjective or objective data. Subjective data comes from the member itself. The member declares, for example, their own income. But we know that subjective data is not always reliable. So sometimes the credit union has to make a prudent decision when they are going to verify this information with objective data. For example, looking at the payslips, looking at open banking data. The point is that credit unions should be satisfied that they have enough information to justify their lending decisions, what they did and why, and that they have evidence of these. This means that keeping internal records on assessing affordability risk and documenting the decision-making process for approving or rejecting the loans is good practice. So now we have the first poll. Jake is going to release it.
Absolutely, thank you for that. Lovely, so you should see this on your screen now, so if you can please just select the answer. One answer for this one. In your opinion, what will the impact of the guide be on credit unions' lending practice? Thank you very much. We'll give it 30 seconds just to make sure everyone has an opportunity to vote. Lovely. There's still some votes coming through, so we'll just leave it a few more seconds. Perfect. Thank you very much for that, everybody. That's great. We've got loads of responses there. So I will launch that, and you should be able to see that on your screen now. So you can see that 8%, it will significantly improve lending practices of the sector. 63%, so the vast majority of areas, the guide will be helpful for the sector. The guide will make some difference, 23%, and the guide will not make any difference, 6%.
Okay, thank you so much. Really interesting results. So let's continue then the discussion on the various standards. So standard 6 talks about previous borrowing. It's important, and this is already good practice that credit unions practice, to assess based on sufficient information, the previous borrowing of the member. This includes any current debt, previous debt, that is with the credit union and with other lenders. And obviously this is where the challenge also comes in, that sometimes data might not be available. But it's also important, and this became clear during the drafting process of the guide, that it's important to look at the members' borrowing behavior, the pattern of their borrowing, because this can be a sign of paying off debt taken out elsewhere. So it's not just about the amounts borrowed elsewhere or within the credit union, but it's also about the pattern of their borrowing behavior. Standard 7 looks at the member's income. That credit unions must make a prudent decision on how to clarify the member's income. So this means that the member's income needs to be considered. Now, where the information is coming from will be up to the credit union, whether it is from the member itself, the personal declaration of the member, or whether it is going to be from some objective data sources, such as, for example, asking for a payslip. There is also a controversial question of whether this should be a member's income that applied for the loan or a household income. There has been different practices from various stakeholders, from all stakeholders. So I've decided to follow the FCA's approach that is explained in a CP 1727 document, where they explain why affordability assessment or creditworthiness assessment should focus on the borrower's income and not on its household's income. So the guide follows this approach. So credit unions should therefore look at the member's income and not household income. Standard 8 talks about the member's disposable income. As you know, disposable income is really relevant because this is the income that members can use to repay the loan that they borrowed. Disposable income is obtained by deducting non-discretionary expenses. So those expenses that have to be paid, whether they are variable or whether they are regular. This is also an aspect that needs to be determined. So it will be up to the credit union to decide how they are going to clarify the member's disposable income, whether this is going to be by asking questions from the member or whether they are going to resort to other sources of information. And then Standard 8 talks about discretionary expenses and spending habits. Although discretionary expenses don't have to be paid, credit unions may have members who have, so to say, toxic spending habits, a lot of gambling addiction, for example, and obviously this should then be considered as well. So again, it's important to look at the members' behavior. And then Standard 10 and Standard 11, and these are the last standard, they look at the lending policies. Lending policies are really important, and all credit unions should have lending policies. So the guide provides that lending policies should be revised in light of this guide. Now, as I mentioned at the beginning, it might not be major revision. It depends, because credit unions may have they have a different level of detail in their policies. But if credit unions are challenged about the lending decision that they have made, then obviously they have to refer to their policy. So this is therefore the sort of level where major decisions are made, and then also they have to provide evidence of what they did and how they did it. So adjusting lending policies in key involuntary compliance. And then obviously it also became clear in this drafting process that lending policies are not static. They have to be adjusted and monitored and changed in light of the borrowing pattern of the members. So it's important to follow the members' borrowing behavior, identify patterns, and adjust lending policies. So now we have another poll, and Jake will release it.
Lovely, no problem at all, thank you. So the next poll should be on your screen now. Lovely, and you can tick any of these which apply. So what aspects of credit union lending practice will the guide impact? As I say, you can select more than one option here. Lovely. I'll leave a few more seconds on this one than previously, just because there's a number of different options there. Okay, brilliant. Thank you, everybody. I will share those results now. Lovely. There you go. So it will result in more frequent affordability assessments. 38% agree with that statement. Will result in better structured affordability assessments. 48%. Will improve the collection of evidence on lending decisions, interestingly, at 58%, so the highest one there, and result in more detailed lending policies, 43%.
Thank you. Thank you for answering the questions. And I actually expected to have these answers, so it's a really, really good result. So we are coming to the end, actually, of the presentation. There are 2 more slides, just to give you a heads up. So I would like to summarize that the key takeaways from this webinar and also of the guide are that loans should be affordable. They should be provided after an affordability assessment. Affordability assessment should be reasonable and proportionate to the circumstances of the case. And it is based on sufficient information. So credit unions should be comfortable that they are confident the loan is affordable given the circumstances of the case. Collection of the evidence on the decision-making process is really important, and it's also important to follow lending policies in this process. So the guide balances financial inclusion, product innovation, and the safety of loans. It is designed for small value short-term loans because this was the area where it was most needed to have some guidance. Obviously, I'm aware that credit unions offer other types of loans and that they don't just cater the category of borrowers that we talk about here, but the guide primarily is aimed at this category of borrowers who are in financially precarious position and who borrow small value short-term loans. The guide balances the interest of stakeholders. It has been, as I mentioned, the process was long. The interests of various stakeholders were considered, and therefore the guide is a compromise. It might not reflect the practices of every single credit union, and this would have been impossible. Initially, I thought that this is going to be just an exercise of collecting good practices and translating them into legal language and putting them onto the paper, so to say. But then at some point I realized that this is not going to be possible because the sector is too diverse and the practices of credit unions are very different and sometimes even contradictory, which is then not possible to translate into legal language. So sometimes choices had to be made, and this is where compromise came in. So the guide is a statement and collection of good lending practices, so not all practices that every single credit union would follow. This is also, as we already mentioned, the beginning of the journey and not the end of it. So I'm hoping that the guide is going to get good use. I'm going to be in touch with some of you who said that you are happy to be contacted in the future to see how you are getting on and whether any changes need to be made in the guide. In the meantime, if you have any questions, note down my email. You are always free to email me with any questions, any comments, or anything that you notice in relation to the guide.